Thanks so much for joining in. Now, you know, the last 3 or 6 odd months, Ajay, and you have to give me credit out there, that I remember that almost all the moves that have happened, you've shrugged them off saying, ye hota hai, isse koi farak nahi padta hai. My question to you is this. Does this change the dynamic a little bit? Does it also give this government a bit of a leg up when it comes to the Gujarat election?
Hey, Ajay, before you answer that question, I have a Hindi film dialogue for you to quote back at Niraj. Bade bade deshon mein choti choti cheezein hoti rehti hai.
Well, I agree with that. It is not a choti cheese, let's be honest, it's not kidding. A choti cheese. But I think it's come at a very wrong time for the government because just when it's come, all the things that this was supposed to predicate upon are coming into doubt, whether it's a fiscal policy, whether it's interest rate, whether it's giving a program to the poor, whether it's subsidies, whether it's a fiscal stimulus. Everything is now on the table at this point of time, and I believe that every action will be inversely proportional to the way the election results come out. So if the worse the results, the more will be the fiscal profligacy. I think leave aside what happened in 3 years, you will see a different government for the next 14-15 months.
You know, I think that's interesting, but I think also maybe we have to take a look at the fact that sovereign ratings are not short-term, medium-term or knee-jerk. They tend to have faith in the underlying fundamentals of an economy, which is why you will see that even at 90% debt to GDP, Spain is where it is. Even though not very long ago, 5-6 years ago, we were talking about the pigs and we were talking about Spain maybe even exiting the European Union. But till it was in the Union and till Germany was the bedrock of the Union, there was faith among sovereign rating agencies that countries like Spain will find some, you know, protection in some form or the other. So I suppose maybe this is just a structural change in approach and attitude towards India. It may not mean anything in the short or medium term, Ajay, you know, and all the things that you said are valid in the short and medium term.
No, I think if you look at what happened in America, they brought the rating down in 2011 and the American stock market has never seen a better rally than that point of time. So, you know, one has to take a pinch of salt that what the rating agencies look for, what they do. But the impact is clear. The fact is that you can now access a bigger pool of capital around, particularly in the US, than you could before. So there's no doubt that there is a positive to this. Now, how much the positive translate for us in the short term, I doubt very much. If it is the long term, it definitely helps because you have much more number of institutions who are not invested in India can now invest in India. So to that extent, you had the huge issue of FPI selling off, etc., coming through. The debt, if companies want to raise debt, they should find a better reception, a better audience when they go to the US to raise money. So, you know, just the fact that the pool has been enlarged, I think is a good positive for the fact. The fact is now there is greater pressure on the government to maintain it. Now, that's the worry out here because yields at 7%, elections, you know, the underlying economy is struggling at this point of time. That's a fact. And the last point is, we may say reforms. The question which we ask in political forum is reform for whom? Is it for people like us, me and you sitting in the studios or sitting in the cities or owning large stock market portfolios? Or is it for someone down in the rural areas who's lost his job? So its question is, you know, it's all a matter of perspective. From our perspective, this is a great development. From someone who's in a different situation right now without a job and maybe his shop had closed down, it's a different perspective.
That's such an important point, Mr. Srivastava, because, you know, it's fabulous news, guys. It's, you know, all of that. Nobody is taking away from all of this. But the big but here continues to be the formalization of the economy and what that is going to mean for people, perhaps at the bottom of the pyramid. I'm using that term very, very sort of loosely. But are these people going to be able to transition into the formal sector? Have they been skilled enough to be, you know, absorbed in the formal sector? Are there enough jobs in the formal sector? And if there are not, we don't know. Maybe it'll, the system will adjust. But if there are not, then does that not come back via demand? I think, you know, nobody should lose sight of that question. Mr. Srivastava, you want to come in on that? Because, you know, that does remain the big unknown. Great, we are trying to formalize the economy. How successful will we be?
See, I think formalization is always welcomed in any setup at all, because theoretically the formalization process needs that you're upgrading people to higher skills, higher standard of living, and that's the bottom line of formalization. It doesn't mean unemployment at the end of the day. But I think here we have a little bit of dichotomy which is taking place at the same time, that the formalization process has been brought about by mechanisms which brought in a severe amount of pain first. Now that's what is bothering people. I think formalization is fine. People need to be brought up the curve. People need to have better road, better access, education facilities. That's also formalization. Better healthcare. We have access to our best facilities in hospitals. They should have the equal access. That's formalization. I think the problem here is that the disconnect between the process of formalization, that's what has caused the pain in the middle, and that is why the word formalization is now getting to be a little bit of let's put it this way, undesirable comment at this point of time, because a lot of people are being left out in this game, and hopefully the government should do something about it. Now coming to demand, let's be honest, when you pluck out a couple of lakh crores on petroleum duty, which comes out of the citizens' pocket, goes to the government coffers, we all know in private expenditure is far superior to government expenditure. So when you took out a couple of lakh crores by high petroleum duty to the government coffers, you're obviously taking money from a more productive people to the less productive part of the economy. And that is what is playing out today. When you say demand recession is what? We are all paying up larger proportions of money for our fuel and our common expenses, so leaving much less for savings or investment, and consequent to that, real estate is also in a tizzy, which is a great employment and velocity generator. So the problem is large transference of money from private sector to the government sector with much less results coming out of the government sector. Let me be honest, give the benefit of doubt that you build infrastructure, build roads, but that takes 10 years, 12 years to come back to capital. When you and I spend money or buy assets or buy houses, it creates employment immediately. And I think that's where the problem is coming, that too much money has been sucked out from people's investments or people's expenditure, consumer expenditure, into government coffers, and for logical reasons, I guess, but the impact is very clear on the demand side.
I'm curious to know about the markets, Ajay. Niraj was earlier speaking to Rakesh Jhunjhunwala, and he says, listen, he really doesn't bother about what foreign investors are doing. The reason why I'm asking you this question is, the investors that we've been speaking to for the last couple of months, we don't even feature on any of their top trades for 2018. Does this change, would this trigger a change in their view?
Well, if you're talking about, it will not change a trigger in the view, because in our assessment, they're still a little worried with the fact that the prices of the stocks are far in excess of the fundamental on the ground. Now, we don't have a choice, barring a LUMS exposure we can take abroad. So we have to keep buying the stories and keep building on the local portfolio. They don't have to. They have a global vista to look at and other opportunities. Our stocks are very expensive. There is no doubt about it. You're talking of P's in excess of 70s and 80s and so on and so forth. Even our star, absolute star, Maruti, if you look at the quarter-to-quarter performance, it had a struggle on this quarter, but the P is running wild and price going up everywhere. So I don't think it's a function of what's happening on the ground. It's purely a function of that the domestic liquidity has taken prices to a level which it reasonably can't be justified by the PEs of these companies. Reasonably can't be justified. Now, we still find stories, we keep building, there are some odd stories coming up. It's not they're not investing, they are investing. But the issue is that the big ticket money was coming into the banking sector, which has stalled. The prices have reached some levels. There's a hiatus there in investment. That is where the first big hit has come, is the investment in the banking sector. It's already saturated. Everybody's at such limits. People have invested and bought whatever they wanted in the private sector bank. Few investors in public sector banks. So a large chunk of money which came into the banking sector what drove the FPI investment. Now that needs another sector to find. It can't find this sector. Insurance, you see, has come at a very expensive price, and we don't recommend buying it. All the insurance companies, I think if the price correct, they will definitely come and buy big time in the insurance sector. Consumer sector also has been redrafted very high level. Look at Britannia, look at Batas of the world, etc. You are really talking of very high PE. So why would anybody want to come and buy in these stocks? I think the issue is simple. We need to find sectors which will translate dramatically in the next 2-3 years, and you'll find FPI buying. The saturation of banking is what is holding back, and that was the main focus area to invest. You look at FI investment, it was mostly financial services.
Yeah, that's true. Ajay, really appreciate you taking the time out and joining us today, though. That's the view from.
Thank you very much. Have a great weekend.
Thanks, Ajay. Thanks so much.